Hello, 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 everybody. How y'all doing? How was your day? Giving people a chance to hop on. Geronimo's on with me. Hey, what up, Nick? If y'all are in Discord or in YouTube, obviously you can always comment in Discord. I'm not telling you not what to do, but it's easier for me to see things in YouTube. Generally, I will run out of space eventually looking at Discord, and it's easier to miss. So if you do comment, throw it up in YouTube. If you do get Discord, I'll try to get it. And if, as we're going through this, and I'll say this again, Geronimo, or I miss a question, just throw it up again. It's easy when we're talking to kind of to miss something. What's up? What's up, guys? What's up? Welcome. How was y'all's day? Did you have a decent day? I hope y'all had a solid day. Honestly, for me, it was a one of the better days. Awesome, yeah, solid, small green. It was one of the easier, like, the moves were working. Tesla's ATR was good. The Qs were trending down really well when I was trading them. Um, like, I thought it was one of the more easy days. I'm not saying that every trade was easy and that stuff didn't work, but just for what I was doing, I was finding I was like, man, this is pretty successful. It got hard there for about 30 or 45 minutes. I took some losses and probably lost, I don't know, 30%. And then I came back after that and went back through day highs and then locked it in. AMD was good. The Qs were good. Honestly, Amazon was good. Tesla was good. Like, there were a lot of opportunities today. And I want to talk about some of those opportunities in tonight's show. I did really good in Tesla in the first 30 and tomorrow. So we'll do the intros right now. So tomorrow's show, I am only going to be trading for about 30 minutes tomorrow to 45 minutes. I'm going golfing again. Personally, that helps me a lot, doing stuff like that during the week. So I'm going to trade early. Had a good day today, going golfing with a friend tomorrow, so that'll be nice. Let me fix this. So, but tomorrow night show, I'm going to do a little bit of psychology talk, but we're also going to review my trades from yesterday and last Monday. And the goal of that is not to be like, oh, look at my P&L, look at any of this, but just how I traded Tesla, what I'm looking for, and different things like that. I might have traded Amazon, or I might have traded AMD. I had some trades when I held longer. I had some trades when I just took quick scalps, and it was kind of a feeling out of the market. So I want to talk through some of that with you guys. I haven't reviewed those trades yet, but I'm going to review them tomorrow. I'm not even going to have time to review them before then. So that'll be tomorrow's show. Content has been lacking. I said it on the last show. Sorry. I know I've talked about more strategy videos and different things. I have very little time right now in the middle of moving, in the middle of selling my house, in the middle of all this other stuff, along with the general parenting stuff. So just, bear with me. Once the second, third week of March is over, I will pick up the content and pick up a lot of different stuff a lot quicker, and we'll be doing a lot more in just the nighttime shows on here. So with that, an introduction to Geronimo. Thank you for coming back on the show again, brother. I really appreciate it. I thought it was a great show last time with you on here, and I wanted to kind of follow up on it. So thanks for coming back, man.
My pleasure.
So guys, I'm Gator. Welcome to the swamp. Let's talk about the market. Geronimo, you need an intro.
Need an intro.
You need an intro. You got to get more
That's
legit with an intro.
that's pretty fancy. I'm liking these cuts.
There's a couple more coming.
Very nice. You got a graphic artist in your life, I guess.
Yes, actually. He actually is in chat and stuff and has a company where he's starting to do this on his own, and he used to do it. He's getting back into it. So I'm going to post some stuff about him and some of the stuff he does. But yeah, Ditter, he's in Discord. He hangs out here some. He trades. So, and he does some
Nice.
really, really awesome work. So all the graphic stuff you guys see, all the designs and stuff, I am not that talented. Don't know that, like, ain't me. But thankfully, there are people out there who are better than me that can actually, do that kind of stuff. So you guys know, the usual disclaimer. Hey, I'm just giving you my opinion. This is for entertainment purposes only. If you're not entertained, you can click away. If you are hanging out, leave a like, comment, share, subscribe, all that kind of stuff. So, Geronimo, after the last show, and just as I've been trading with you more and working on a lot of the strategies, a lot of the long term, longer hold stuff. So, for those who don't know, or for those who are just jumping in, generally speaking, what we do in this room is we scalp. And we scalp C strategies. Simple, easy, effective is what that stands for. I'm not going to go into what those are, but they're quicker time frame trades. You trade, it's entry points for 30-second trades, 10-second trades, 5-second trades, and they're based around really trading the momentum in a name, like a breakout or breakdown. You need one of the two to really have effective C strategy work. If it's just in the middle and you're getting a lot of chop and not a lot of good price action movement, it's a lot harder to trade them. And one of the questions I got last time when Geronimo came, I got a few of them. One of them was, what's price action? And I talked about that some. CT did a whole thing on it and has a whole PDF, which we posted in the Discord. And, I've answered some of those questions, and we'll probably do another show on price action. I might talk about it some tomorrow, or even on Friday's show. But some of the other questions and some of the things I've noticed, Geronimo, and I think you've kind of noticed the same thing, and you mentioned it on your show tonight in the Newsbeat live room. And can you, again, for the people who may not have watched the last show, go check it out if you haven't seen it, or for the people who do, can you, in a brief term, say the difference in what a C strategy is, and then some of the range plays like measured moves or the different levels? How would you describe the style of trading you do as opposed to the quick C strategy scalps that we do? And I know you do both. So just before we get into the mental aspect of both of them, what do you do?
Sure. So C strategies are a day trading strategy that encompasses a setup, such as an inside bar breakout, a bull flag, or a breakout, or a buy setup, sell setup. So to the long and the short side, and combines the setups with specific parameters that include VWAP, moving averages, and price action based on highs and lows, and combined that setup with those moving average strategies and price strategies in order to create one setup that encompasses both the technical setup as well as the actual risk management strategy as well, right? Which is why it's called a strategy and not a setup. They are all based, in my opinion, on momentum continuation patterns, right? So a C strategy can only occur after or during a volume breakout, right? So, and it occurs, or it's valid rather, or encouraged either above a 2-minute high on the long side, or below a 2-minute on the low side, or the short side. And basically, they are continuation patterns within an existing move, either to the short side or the long side, but they are momentum continuation patterns. Mm-hmm. What is a continuation pattern? A continuation pattern is basically a pattern that exists within a larger move, right? So, for example, a continuation pattern would be, say, you're in a momentum breakout. A continuation pattern would be a bull flag or a falling wedge, or say you're in an ascending channel. A continuation pattern would be a bull flag, et cetera, et cetera. Yep. So C strategies exist as continuation patterns, and they encompass both price action, moving averages, and patterns to form the strategy. They are fantastic. I use them every day. They were created by Mark Melnick, and they are a work of genius. I love them. And they're a fantastic tool to have in your belt, for sure. They are different, however, from, say, for example, a longer, say, day trade or scalp that other traders might take in say duration and parameters. So it's definitely important to have those differentiated.
And one difference in what C strategies are, and the reason Mark used them and liked them. And guys, I'm messing with my screen to try to share Geronimo's screen. So if you're watching the video and you see this stuff go black behind me, I'm messing with something. So give me a second to get that worked out. I should have done it before the video started. But they have a certain mental ease about them. Like trading can be toxic. And I think we all know that. What's up, Jason? Trading can be toxic. Trading can, like, it's mostly mental. Like there's definitely like the actual computer physical part of trading, but a lot of it is mental. C strategies have an advantage because of how simple they are to be right or wrong right away, to get into a trade, to kind of rack up that positive what's the word I'm looking for? That positive win ratio, that confidence in yourself as a trader, especially as a new trader, to be like, I can do this, I can make money. But there is more to the market than that. And because we as C strategy players kind of, here we go. So I've got your screen up now. We can't see mine. So the Zoom screen is the only one that we can see, JR, just so you know. So I can see yours.
I'm so impressed with your technical prowess right now. You have no idea.
I don't even know. Like, I was trying to figure it out, and I'm just like, oh, well, I'm going to go back to the other one. And I'm like, oh, it works. Okay, cool.
That's amazing.
So what we have is basically scalps within a bigger move. Because like you said, we're playing the trend. So everything that JR just said, we're basically playing the trend or playing the momentum in a name when we scalp something. So we're playing moves within a move. So if I was, let's see if I can actually do, I think this. Now we're looking at mine. So if I was to go to Tesla in the first few minutes, just for those who don't know, oh man, one of my kids is waking up screaming. Probably means I have to run upstairs. So I will be back probably in literally like, let me give him a second. Sorry guys. Well, let's see if he calms himself down. So if you can, I'll share, I'm going to throw your screen. I'm going to move me out of the way really quick. Can you demonstrate an early C strategy or two and a name, and then show how that, and it doesn't matter, you could do it in the queues, you could do it in anything, and then show how that is part of a bigger move. Do you have like an example you could quickly pull up of that?
I'm sure I can find one real quick for sure.
Yeah, well, let's see.
Okay, so we have Tesla here today. Oh, okay.
Okay, right. Sorry, yeah, he stopped. I don't have to go.
Go for it.
Now I do. He won't go down, so I'll be back. Sorry. So I'm going back to your screen. Let's go there. So I will be back. I'm out of the way. I'll be back in just a second.
No problem, sir. So a C strategy basically requires first a volume breakout, and then within that you have a continuation pattern, a volatility contraction, either in the form of a Mark 1, which is a resting bar and then a breakout, or something like a know your limit 8, which is an actual volatility contraction pattern into the 8 exponential moving average. Some people do it on the 2 minute, some people do it on the 1 minute, but the idea is that you're resting into a moving average, and then from there you're breaking out over the previous candle high. So let's look here at a possible know your limit 8 or know your limit 21. Okay, so for example here you had a high volume candle into the 8, and the next candle to make a new low would have been this candle here, and that would have been it's a type of sell setup obviously, but what the distinguishing characteristic here is that you had a high volume breakout here, which is referred to as a chart reset, and then a test into a major moving average. So this would have been a 1 minute know your limit 8. And that's the know your limit 8, which is basically a sell or a buy setup into a moving average, you can have a uh, sell or buy setup or inside bar breakout without a moving average, and we would call that a Mark 1. And that kind of encompasses them in 20,000 foot view.
Okay, so back. Um, so I assume Geronimo just kind of explained the C strategies and then the overall move. The C strategies, to what I was getting at, are very effective, and they work well, and they don't take a lot of mental stress because you're not holding a position very long. What's the difference? I see people conflating this. What's the mental difference in doing what a C strategy is and then doing a longer play or a longer hold with a target? What do you personally have to do differently? Because this is something I'm working on, and
Mhm.
I kind of do something that you mentioned not long ago, which was you said that when you're teaching new traders to trade, you will just have them make $1 in the queues, trading one share or something like that. So I've actually been practicing doing range plays and measured moves and pivot breaks and different stuff with one contract, long or short, or not even contract, one share sometimes of these
Mhm.
names. Like, hey, can I do this consistently? Am I allowing the trade to work? And so I'm trying to train myself to think about a trade differently when I'm trying a range trade. But for
Yep.
you, what's that difference in the two strategies on the mental side of trading?
Sure. So I don't employ I don't employ C strategies unless I have a trending day with a momentum breakout underway, right? Because in my experience, C strategies, because they are momentum continuation patterns, uh, tend not to work well in range bound or choppy markets, right? The momentum isn't there for them to work because they are exactly that. They are momentum breakout continuation patterns. So we've had a lot of choppiness in the past couple of months in the market. We've had a lot of days that are range bound. So I started very slowly in the T3 live room introducing other concepts to traders to try to slowly increase the market vocabulary so that A, we keep people out of trouble, and B, we start to slowly recognize other opportunities in the market that may lie outside of momentum continuation breakouts. And so, recognizing market conditions is definitely phase one in doing that. And I've been trying to introduce that kind of market vocabulary so that those days are more easily recognizable and people start to adjust risk accordingly and trade accordingly. I don't size up the same way if I'm going to be doing, like, say, a Mark 1 or an inside bar breakout than I would necessarily if I'm, say, shorting the top of a range and looking for a $3 or $4 move in the queues, right? Those are really, really different types of trades. With increased time in a trade, you could have increased probabilities of failure and also an increased psychological toll on you as a trader, right? You have a psychological gas tank that you start with every day, and if you're not careful, you begin to deplete it every day and not refill it the next morning completely, right? So maybe on Monday you start with a full gas tank, and by Friday morning you're starting in with maybe a quarter of a tank left. You know what I mean?
Mm-hmm.
So
Sure.
there are trades that if you're not ready to take, or if you're not used to taking, or if you're not taking properly, and you're exposing yourself in the market longer, they may work, but may take a little bit more of a toll on you in terms of stress, because maybe you're watching your P&L fluctuate up and down, or maybe they're not working right away, and the anxiety and the need to be right. A lot of traders unfortunately suffer from the need to be right and the need to have instant gratification. And it's not a judgment; it's just a personality trait. Some people have this more than others. Uh, that could be extremely toxic to some people. So it's good to know that about yourself. And technically speaking, it's good to make sure that you're taking trades technically that are going to be in sync with your risk management and your psychology, right? So
And so here's an example in the cues if you look at my chart, and I want to show what I think people are doing. And then JR or people in the comment section, let me know. And let me know what you
is that
think
today?
about what I'm saying. This is today in the cues. This is in the afternoon. I'm pretty sure you called this short, maybe. This was
I did, yeah.
3:16. Yeah. So I had just gotten back and I missed this. So I missed the original entry and I looked back and I saw it and I was like, dang, I could have taken that. But here's kind of what I see happening. So this is about this start right here where my cursor's at 307. What somebody could have seen. Now I don't know when you took this because I had gotten back somewhere in here, I think. Um, but let's say that they wanted it here on this green candle, and they were like, "Hey, I'm going to take it short here." And they're a C strategy player, so they're very used to instant right, instant wrong. Maybe even their size is incorrect. So let's say, when they should have been taking 10 contracts in this and let it play out for a $2 or $1 move, they took 30 contracts, 50 contracts, I don't know. But so let's say they incorrectly size. This could be one problem that they do.
Hmm.
But they get in and like, I'm looking for this to come down to VWAP because that's what that kind probably would have been my target just looking at this chart here, or maybe even the 200. I don't know what you call, but I looked at them like, hey, if it fails this level, it might at least go down to VWAP. So they
Yeah, our
look at,
target was at 200, but yeah, it's the
okay,
same idea.
yeah, it could have been. So you're in here and you take it, and then it pops back up, and then maybe you hold through it, and you're like, I don't know, and you're not used to kind of being flat and being in a trade for 2 minutes where it's red and you might be incorrectly sized, and then it goes down like, okay, maybe I'm okay, okay, maybe I'm okay. Oh, it popped back up, and it's technically at one point this candle would have looked green and kind of strong, like it was going to break out. You can be like, oh crap, oh crap, and then you may have sold somewhere in here, and then as soon as you sell, you're like, okay, I'm done. Like it didn't work. I'm just going to take my little loss. And then it goes down in your favor. And then you're like, oh man, oh, I missed it. Okay, I'm going to try it again. And then you take it when this candle breaks down. Like, okay, this is kind of a Mark 1. I'm going to take it. You buy it. And then it pops back up in your face. I mean, this isn't a lot. That's, I don't know, 50 cents. That's a little bit for the Q. So you get this pop up. And then you're like, you lose again. You're like, I can't do it. And then you're out. And then there it goes back in your face again. And now you're just beating yourself up psychologically because you can see, and this is what I'm seeing people kind of do in these different names who are talking to me. They're like, I don't get it. And then they're going down here and then it comes back up and, maybe they try a front run in here and like, I'm just going to hold it. And then it pops all the way back up here and then they sell again. You know, so they just completely destroy themselves mentally when they're trying to do this and when they're going through it, doing something very similar to what I'm saying right there. It's not exact all the time, and maybe there's a little bit, a little bit of play there, but roughly that's kind of what I'm seeing. And I say that because that's kind of what I did and kind of what I do as I'm
Sure.
learning to trade this way, as I'm going through it. I'm like, I notice my ability to see things in that shorter, like to almost revert into the C strategy mental side of trading, where I'm like, you know, where you don't hold losses. It's like you're right or you're wrong right away. You're not
Hmm.
playing a range and a level. So how can traders who are trying to do this or learning? So sometimes people should not try to do this, but let's say someone is saying, "Hey, I want to try to learn how to trade like this." Geronimo's talking about it. I'm trying to understand what he's saying and what he's talking about, and learning these levels and how to incorporate them. How can someone learn to handle the mental side of that switch? Because that's a big
Uh,
switch.
yeah, yeah, it's a great question. So, uh, it, I the first thing I do is I'm always looking at much bigger time frames than the 1 or the 2 minute as a reference point. So if you go to the 15 minute in the queues, you have a tweezer top, and it's a tweezer top into Friday's close,
Yep.
right?
This is your 15
So
minutes.
yeah, exactly.
You can see the
So
15 in that. Yeah. Sorry, go ahead.
that's what I'm looking at, and that's like anything above that tweezer top means the trade's no longer working, right?
Hmm.
So that's my reference, and when I take a trade like this, I'll take smaller size than I would on say like a raging Mark One, where I have Tesla's going to explode $3 or $4 in my face. I don't need to take size on a move in the Qs, for example, that I think is going to move 3, 4, or $5 when I have a very clear delineation point of risk here in this tweezer top into previous day's close, and then I can decide, okay, this is going to be my line in the sand, which worked really nicely, and I can either do a 15-minute breakdown, or I can build a position, like do like a starter position, and then add when I have a lower high and then a sell setup, which happened at 3:30.
And what's
So there's different ways.
what's the
Yeah, go ahead.
danger of doing it this way? Like, so what's the risk is kind of what I explained, but
Mhm.
how do you, so is just by looking at it on the larger time frame, like the main way? So you would look at this 15-minute chart and you would be like, here's the whole day. Okay, we went down, like, da 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 da, pop back up, or at yesterday or Friday's close. We have this tweezer top here, and you took the entrance here, and then you had a sell set up when this 15-minute broke down. So as long as it doesn't go green and pop back above here, you're pretty much good to go.
Exactly. So basically, I mean, here's what I was here's the totality of what I was thinking. Right,
Mm-hmm.
we had a very bearish dominant kind of day. Right, we have a
Mm-hmm.
red tape dominant day, and we basically trended down from 10 o'clock to 2:30. It was just straight down, railroad tracks down, and then President Biden came on. He basically implied that unless the Russians start poking us with a stick, we're not going to go to war with them, right? So the market rallied. We played that counter rally really well in the room, and then just based on the level, I felt very comfortable that was the end of the line, based on how dominant the selling had been on the day, and the fact that we had an MOC that was like what 2.7 billion to the sell side,
Yep.
right? So all of that gave me a tremendous amount of confidence that was the top of that range, and I look at charts based on compression and expansion of ranges,
Mm-hmm.
right? Which goes back to like Richard Wyckoff. I mean, this is like 100-year-old,
Mm-hmm.
150-year-old approach to trading, right? You've got your accumulation, your markup, your distribution, and your markdown, right? So to me, this looked like right here between 304 and whatever this was here, 318. That was a consolidation for distribution. Oh, no, I'm sharing my screen.
Yep. I jumped
Right.
over to
So
you
here,
so everybody could see it.
okay. So this is your distribution, and you've got clear topping tails into this level, right?
Yep.
On the 1 minute, just you keep on bumping your head into it. So to me, this is like seeing a road sign, this way to Memphis. You know what I mean? Like
Mm-hmm.
it becomes very clear that we're in an area of distribution now, uh, and a very clear level of resistance based on the fact that it's or sorry, Friday's close, right? So you've got all this overhead supply into this level, and you've got an MOC that was, I think, 2.7 billion to the sell side. So all these things to me uh, spell a really clear picture, which is why I'm able to look at entering a short with a lot less anxiety, you know.
Mm-hmm.
So
And
that's kind of how I approach the price action. I'm looking at this as a rubber band that's stretched, and it's not just stretched to a normal level. It's stretched into a supply area, right? This is an area of overhead supply. You're forming a distribution pattern here, and you've got a really large sell side MOC. So all those things I look at when I'm looking to enter. In this case, what was a very old school type of end of day reversal.
Yeah, it was beautiful. I wish I would have been there to catch it. I've learned not to see strategy the range plays that you're calling out. And I
Yep.
really, at least when it comes to in the middle of the plays, and I really appreciate them. I love, what you're doing. I think it's great to help people kind of advance in this kind of market when you don't
Yeah.
have strong trends all the time and being able to identify. And that's why I'm glad, you could come back on the show and kind of talk through some of this stuff. Um,
Sure.
is to help people identify stuff like this is, I think, key to keeping that long-term success. But it could be noted that you don't have to do this kind of stuff. So like if you're coming here, what up, Rose? If you're coming here and you're doing this and you're like, hey, I don't get this, there's nothing wrong with not getting this and not taking these
Absolutely not.
plays. Just for everyone
100%.
listening, yeah, it just because JR is in a trade short, or Kelly's in a trade long, or Gator's long or short, or some person likes it. Like we said this on our last show, and just saying it again, you
Yeah.
don't
If you want to
have to
get
do
wrecked real
this.
quick, try to imitate me or Kelly.
Hmm.
I mean, you have to figure out who you are as a trader. Take what other traders are doing with a huge grain of salt. Understand maybe the levels or their strategy, but then you have to figure out for yourself what works. So if you took, for example, if a lot of people would have a really hard time just uh, putting out offers into the 341.50s, right?
Hmm.
And just waiting around for whatever this was, 5 minutes for them to be 50 cents in the money. Like for a lot of people, that would just wreck their day emotionally.
Yep.
For a lot of other people, like this is totally fine because they're thinking, all right, if I was wrong, I'll be wrong 50 cents, but if I'm right, I'll be right $2, $3. Well, this is even a bigger move.
Mm.
There's absolutely nothing wrong with either way of doing things. Uh, Being non-judgmental as a trader and non-judgmental of others and yourself is super important. This this business is a combination of like strategy and psychology. If you pick a strategy that doesn't psychologically jibe with who you are, it's going to be impossible for you to follow through with it. So, what Gator's saying, I agree with very strongly. It's very, very important that you don't follow people blindly because I have a different psychological profile than Gator, than Rose, whoever else may be watching. We have different lived experiences. Maybe a novice trader isn't as familiar with price action or with the way things move, and you could get shaken out of a trade 8 times before it works, and by the time it's finally worked, maybe you've lost like who knows how
Yeah,
much
you
money.
lost your day, or
So
you lost
you've
your
lost your day. Exactly. Yeah.
account. And to also flip this, you can't apply. So here's part of the same problem that people are having, or that I see people having, because in the same way as I'm sure you've talked to people, and for the people on YouTube, when especially I would say as we're novice traders or as people who are learning, it may be hard to jump between psychological profiles in yourself very quickly. So for people who have a problem holding a trade too long, and then they just took a loss in a name, or that they're having a hard time, and then they hear JR on the mic or Kelly on the mic or me on the mic, I'm still in this Google play, like I'm just letting it play out. For an example, something I say sometimes, or I'm going to hold this to day lows. Um,
Mhm.
for them, sometimes the struggle can be, okay, well, I'm going to jump back in this, or I'm going to do it. Okay, I'm losing, and I'm losing because everybody else is holding. Like, oh,
Mhm.
they're holding all day, or they're doing this. No, like that's not why you're winning. That's not why I'm winning. We're not winning more or less because we're holding names longer. If I was to hold every scalp I took longer, it wouldn't be effective and it wouldn't actually work. the trade. I am locating a trade based on something, and the parameters of the trade are different. And I'm not. You can't mix the psychological profile of this Q short, just to use an easy example here, with
Yep.
the psychological profile of when you're trading Tesla. And if you're taking losses in Tesla early, like if I'll throw up my screen and jump back to just like Tesla early morning,
Yep.
if you're, where am I at? We're gonna look at a 1 minute profile in Tesla early in the day or something. So, um, sorry, let me shift out of this thing. So, if you're looking at Tesla and you're like, let's say you took the, I'm just trying to, let's see a move that somebody might have taken loss. Like if you tried to play a breakout or something and it didn't work, and you're like, man, if I just would have held that longer, or somebody else was holding this whole move or something like that. So that's what I'm going to do. And then you're like, okay, I'm up here and I don't know, I bought this breakout and I wanted it to break through here and it didn't. I'm just going to hold it, and oh, it never came back. Like you're in here. All right, this is a better one. So let's say you caught or missed some of these moves, or let's say you missed most of them, because these are pretty good moves. I think this is where I made most of my day. So let's say it comes back down here, and right here you're like, okay, you're toxic because you missed some of these moves, or other people played them better than you, or something else happened. I don't know what it is. You're down here now. You're like, man, this looks good. The stochastic is low. Like this could break out. It hit the 21. Tesla could pop here. I buy in on this candle and it doesn't work and it goes down. Instead of just being like, I'm out, I mix my profile to what you're talking about doing, and what we're kind of talking about, the longer plays. I'm just going to hold it. I'm going to let it play out. I'm going to give it some room. And then boom, 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 boom. And
It's extraordinarily dangerous. Yeah.
you just held a trade. And maybe that's kind of the danger, because that's a like almost, I don't know, decent
One of
little
my
loss.
yeah. One of my golden rules is never let a scalp turn into a day trade.
Hmm.
Um, and also letting a day trade turn into a scalp can be bad for your health. If you have a plan for a day trade, I always tell people, like, a day trade to me is like a business transaction, like buying a house or doing a business deal. You have a pattern in mind. You have a clear idea of what's happening there, right? It's a real trade that you have in mind. You're looking for a certain thing to happen. You're looking at a certain level, and you have a goal for what you want that thing to do. A lot of people, I was talking about this earlier, they take scalps, and they're looking for 20, 30, 40 cents in a scalp, and it goes against them 30, 40 cents, and then all of a sudden they let that become a day trade, and before you know it, it's a swing trade, and 30 minutes later it's become a core position in an investment portfolio.
Hmm. That's
You have
red.
to. Of course, it's always red. Yeah. So you have to just be keenly aware of your goals, and differentiate the both the psychological posture of a scalp versus a day trade, and what it is you're trying to achieve,
And
right?
and I can see here why this wouldn't work, but just for the negative, we're talking about the negative toxicity part of the traders who are mixing the scalps. How would you, I guess knowing the strategy is the answer, but I'll let you answer it. So this pops up, you miss or whatever some of these moves. Okay, we're right here on the 1 minute chart, down here on the 2 minute. I have a lot of reasons why I wouldn't take this trade as a long, but for somebody who's a novice, like, okay, I'm going to buy the next 2 minute breakout or whatever, and I'm going to take it, and my strategy is to hold it to day high. Now that's not a very good strategy here, but let's say that was, and so now their answer to your question is, or let's say it was this breakout. The next time a 2 minute broke out, so it broke out here. Their
Yeah.
strategy is, I'm going to hold it to day high or whatever it is, and then boom, it's down in your face. And that was the
Yep.
strategy, which is what you just, if somebody is toxic, they're going to be like, JR said that, and this was, and I had a strategy going in, I was going to buy it and hold it, and then it didn't work and it went against me.
Right.
There are plenty of indicators why this trade would not be a good trade for a day long right here.
Never in a million years would I take that as a a bounce to day high for sure.
No. But that being said, they came in this with this idea and then they took it and it didn't. So how do
Mhm.
people learn to not mix the two? And is it really just learning the patterns better? Is it spending more time learning, like you talked about doing a master class that you're going to be putting together for the people in the
Mhm.
Newsbeat live room? Is it
Sure.
learning stuff like that? What is it that allows you, other than say other than experience, but experience, to actually do that?
Sure. So, like, I was talking earlier about, the ranges of a trade. You've got your accumulation, distribution, your breakouts, and your downtrends. In that particular case that you're bringing up, you had Tesla. What it was really doing was basically building a wedge, and it was not in a place where you had real bullish tape in any way, shape, or form, right? Technically
Mm-hmm.
speaking, you're in a very bearish pattern, uh, and you had double topped earlier. Is this my chart or yours?
That's yours. I
Oh,
jumped
that's
over to
mine.
you. Yeah.
Sorry, it's
When
so
you No, you're
confusing.
good. When you start talking, I
Uh,
jump over to yours.
okay, yes, and basically what I was looking at was this. You have two things going on here, right? You have this trend line that was respected to the T here, right?
Mm-hmm.
Here, and here, and basically, like, pattern recognition as a day trader and mixing that with price action is super important, because then you start to see, okay, is this really the kicker move, the evil Knievel ramp that's going to take me higher, or am I just building a wedge? So I'm underneath the 1 minute 200 here, right? I'm underneath yesterday's close. I had really bearish tape at the open, and Tesla on the daily is actually breaking a wedge, right? On the daily, you're gapping underneath a wedge already, and you're underneath this algo line through this falling wedge, right? Like, everything about this trade says stay away.
Mm-hmm.
You know what I mean? Like, it's a lot of information, but um, like you, that's what happens when you take trades in isolation. Like a pattern does not a trade make, and that
Mm-hmm.
we were talking about that in the T3 live show tonight. Like, you have to take trades uh, within the context of healthy bullish price action if you're going long. Like, for example, let me go to the cues here as an example, because I think this encapsulates what I'm saying
And
really
then if
well.
you shift L, people will be able to see that particular chart better. If you hit shift L on your charts, like it'll zoom into that specific one.
Oh, look at you, Mr.
Yeah.
Fancy Pants.
And James, it's the level two. When he's saying tape, he's talking about, I believe,
Yeah,
the
time and
level
sales
two
level two.
speed. Yep, that's what he's talking
Yeah.
about.
Okay. So this is a serviceable VWAP retest, and I was talking about this earlier, right? You've got an accumulation pattern here, right? And then you've got your 1, 2, falling wedge, compression on the 200 in the 21, VWAP pinch, bull flag, and can you call these Mark ones? Absolutely. Are they serviceable Mark ones? Heck yeah. This is beautiful, right? If you're a C strategy trader, but we're
Mm-hmm.
talking about VWAP right now, right? Uh, what's happening here on the 2 minute chart? Let me go to the 2 minute. So what's happening here on the 2 minute chart is we have one level of resistance, two levels of resistance, third level of resistance now becoming support. You have compressed 221 retests off of a very bullish falling wedge type pattern, right? And so now we have a pattern where all of the other information actually supports the case for an actual retest of highs that's going to be
Mm-hmm.
bullish, right? You have this level here, which was respected like 4 times that day, and a very, very nice consolidation here not a lot of volume in terms of the digestive pattern, and you've got the moving averages all compressing right into this price level, which was 342.76 and VWAP. And on top of that, to top off the cake, you have the ascending trend line. This is a long I take, right? This is the kind of tape that says buy me please. So
Yeah, that's like
yeah,
beautiful textbook. You look at it, and if you, if all you're watching this, like, hey, I don't, I don't care about any of this or whatever. I just want to do, like, if all you want to do is trade C strategies, I think over time you're gonna have a harder time if you sit here all day, because you really have to sit here and wait for the momentum, wait for those breakouts, take a
yep,
few trades, and then stop. And if all you do is you do that and you scalp around and you're okay with taking 10, 20 cent, 50 cent, which is, there's nothing wrong with that. And you just want to take those, like the Qs, when the Qs broke above VWAP and you got your next 2 minute green
mm-hmm.
takes red right there, and that's the only play
Yeah,
you do, you can make a living doing that. You don't have
a lot
to
of
do
money.
all this.
Mm-hmm.
So, but if you're sitting in here and you're listening to JR, you're listening to me or Eddie or somebody else, and I'm talking about a level I'm looking for, or we're talking about pivots, or we're talking about waiting for something to hit VWAP or the 200. The reason I'm doing that, and the reason you're doing it, is I'm looking and kind of hunting, as I said in a past video, for a specific trade and that specific setup. Like, that's just a textbook, beautiful,
Yeah,
as it were, easy to make money. Just look at that. Like you can see that if you zoom out on a chart, like you're talking about,
yeah,
zoom out, look at it. You can see what you're looking at, why you took that trade, why it worked. You're not just buying something, which is what people do when they lose in a C strategy and then they hold it
yeah.
until they're down 10 points and their account is wrecked. It
Correct.
you there This is the trade, and you can see that the if you're putting in a math, everything that added up to that trade working. It's not
Yeah.
just I like Tesla to break out and the trading gods and the magical people in the forest have told me that it's going higher. you
Yep.
know it's not there's no secret to it.
Absolutely not. It's just it's all the variables need to line up. My original mentor would always tell me, okay, let's look at this chart. If this was a line chart, okay, and all you had was price and volume, would you have taken this trade? And that was really an interesting question, because if this was a line chart and I had maybe volume and in a line chart, maybe VWAP, okay, I would still have all the information I need to take this trade. The story of this chart is 342.76. That's the battle, right? Beyond that, okay, I have descending channels, I have ascending wedges, descending wedges, and ignition here, right? And then I have my consolidation back into the level, retest, higher retest, and finally um, a counter bear rally that took us lower. But I'm not saying I should, and I'm not recommending it, but I know, Gator, you could trade this day in the Qs with a line chart and you would still make money,
Mm-hmm.
because it's the price action that really dictates whether we succeed or not necessarily a pattern like, say, a VWAP retest,
Well, here you
right?
go. I just threw in a line chart for
Yep.
what time frame do you want, but this is today, a line chart in the Qs. I don't
Yeah.
have volume. I could add volume indicator, I guess.
Okay. So
So
just go to Friday so that we're looking at the same patterns, and you'll see what I'm talking about.
it's like zoom out. Can you see?
Yeah, I can see.
Yeah.
Yeah. So that you can see very clearly where 342.76 stops being resistance, becomes support. You have the retest of that area and the breakout, and then finally the higher high at 345.02, and then the break of the ascending wedge and the lower retest. Like, all those things are really clear. Do I like to trade with line charts? Absolutely not. I'm giving myself a huge number of disadvantages. But my
Mm-hmm.
point is, uh, price is the most important indicator we have as traders, and it's a very common mistake early on for people to start relying on patterns that they're looking at in the absence of other variables that are just not just as important, but I think much more important.
Yeah, I mean, technically speaking, not that I would ever just do this, but here's a line right here so you can see it through Friday. I
Yep,
mean,
exactly.
look where it hits. It's like boom, boom,
Yep,
boom, and then support, support. It broke below it. Oh, look, it dropped when it hit it. Okay, we got,
retest higher.
yep, yep. And then a little bit of chop here, but perfectly hit. We're up.
Inverse head and shoulders.
Yep.
Yeah, exactly.
And then twice hit, failed. And this is today. We're in today now. It's like it was support. So I mean, and that's just using a line chart. If you just drew this here, you can see the times when it hits. You know,
Yep, absolutely.
you can recognize your
So
patterns. Not that, like you just said, I would ever want to do that, but maybe it's like a bet. Like, hey, who can trade on a line chart and make the same amount of money? You're only allowed to buy 100 shares, or
oh
something
my
dumb like
goodness.
that.
Yeah, it's like
You
doing
would
dips
win,
with a
but
weighted vest. It's a good exercise to do after the market closes, but definitely not something you want to do on a regular basis. Don't try this at home, kids.
no, but like, just for the sake of, the people looking at it, that's what you're talking about. That's what JR is
Mhm.
talking about when he says you can do this and recognize this stuff. Again, that, and it takes that zooming out to be able to see that. If all I'm doing is looking at something in the short term and I'm just like zooming in on any particular point in the day, like, who knows? You're missing the big picture, and there's nothing wrong with that. But you could be looking at something like, let's see, I'm trying to find a point. I don't know. I don't want to jump around. And you could be looking at something that's totally not a setup, but because you're so zoomed out, you could think, oh man, this is just this is just the best. It's like if
Yeah,
all you were doing was, let's say here, sorry, I'm trying to find a spot. All you were doing is you're just zoomed in at your chart and look at the beginning of this, and you're just sitting here like, oh man, it broke up. I bet it's going to continue. Like, I bet this is going to go up and it's going to break out here and go higher. You could be thinking that, but then if you zoom out and we look where we were at, I mean, there's nothing
yeah.
strong about this chart at all.
Nope.
You know,
No, absolutely not. I mean, it's okay to be Mr. Magoo and be extremely myopic if you are aware that your risk and reward are going to be highly diminished and you're maybe scalping 10, 20, 30 cents and you're respecting a 10, 20, 30 cent loss to the downside if you don't make the trade work, right? The problem is people are extremely myopic in one direction, but not the other, right? And they'll take that 10-cent win as soon as they have it, and then they'll let the losers run $3 against them. And so that's those are unsustainable economics there.
do you know how someone practically can train themselves to differentiate what they're doing, or to differentiate that psychology in these two types of trades and stuff? Like, how would you recommend doing it?
So the first thing and the most important thing is to become really good at one thing first and to have a winning psychology in that one thing. But what I mean by that is you need a winning mindset. A winning mindset doesn't mean you win all the time. It means you behave and comport yourself as a winner, no matter if you have a losing or a winning day, right? That develops a really strong psychology. You've talked a lot about this from personal experience, and you have absolutely the right attitude, right? You trade like a champion, right? And this is like a Mark Minervini term. A lot of other people talk about this, like having a competitive champion mindset. Whether you win or lose on the day, you finish the day strongly because you're actually engaging in all the proper techniques of trading. You're sticking to your plan, and you're behaving. You're comporting yourself with integrity in a professional manner, and you're behaving like a winner. Once you do that, and you build dexterity in whatever your primary uh, function as a trader is. If you're a scalper, maybe the C strategies or some other kind of scalping strategy, and you develop a great deal of comfort in that, then I think it's really helpful to begin to explore other things, like say longer term day trades, very very slowly, And because if you try to do too much at once, you're going to get super confused. I mean, scalping is already difficult enough. I mean, you're competing against the smartest people on the planet with a millionfold more resources than you, right? And your only advantage is your small size, your ability to be in and out of things quickly. Other than that, you're at every possible disadvantage. So trying to do too much at once, it could be lethal to a trader. You need to develop your skills and your mindset, both things together. Like it's like two strands of a rope that need to be tied together, right? Those things need to be developed in tandem. And when you're really strong in that, then to learn price action and to learn look at the much bigger picture, I think you can slowly start to develop the comfort with holding things longer because now you're thinking about the chart in a much wider uh, or at least much more
Zoomed out kind of that.
zoomed out kind of way.
And if I can add something to that,
Sure.
is do it when you're having a good month and you're green.
Hmm.
Like, if you're actually having a good time trading and it feels like your scalping's just like, yo, I'm king of scalping and this is just the easiest stuff and I make money. And, then in the middle of the day when you normally, stop trading or you size down, hopefully, to save your day or whatever it is, maybe it's on those times when you feel really good and you're happy with what you've done that you change your defaults.
Yep.
After you've got that confidence, you've been winning for months and you feel really good about what you're doing, and like it's like I have that base. Like I'm good at what I do. I've got that base. Like you're saying now, the time to try to do this is not when I'm down 10 points on the day, whatever that means to you, and I've
No,
got to get it
absolutely not.
back. And I've got to get it back. And this is going to be the trade today highs. I'm taking the size that if this trade works, I'm back.
Hmm.
That ain't it.
100%. I could not agree with you more. It's so important to do this from a winning mindset and a strong psychology. We carry with us as traders constantly psychological wounds, damage. People don't talk about this, but day traders carry with them a constant amount of toxicity. It's just part of being a trader. As you get more experience and you win more and you become more successful, then it just becomes like going to work every day. But that does take a long time. And being a trader is kind of like being an athlete. You're constantly battling injury. And if you're dealing with a torn bicep, you're not going to pick up 80-pound dumbbells and try to curl them, right? Same thing goes with your psychology. If you're coming from a place of, where you're wounded psychologically, you've been doing great, you've been making all-time highs, and all of a sudden you've got a $40,000 drawdown on the month, and you're not sure why. You are okay. I don't want to speak for everybody, but a lot of traders would be in a place where they're dealing with some psychological scars, some psychological toxicity. So to on top of all that, uh, try to incorporate things that are not muscle memory, that are not fully incorporated into your psychology, where you don't have unconscious competence, is going to add so much to the already burden mindset and burden psychology that you're dealing with already. It's very difficult to overcome that.
Yep. And you're just going to be tearing that torn muscle, as it were, that trading muscle. You're just going to be
Hmm.
ripping that gap even bigger because you're trying to do something that you're not good at then. And it's just
Yep.
like, ow. It's like I can't do it now. I can't do this route. I couldn't do that. Now this isn't working, and the gremlins are sitting here. And as soon as I buy, they're going against me, and I can't do. And yeah, and I just gotta. I don't know. I'm just gonna take this overnight and see what happens. And you
Exactly.
just lose complete like
You take
rationale.
you take overnights out of desperation. You start taking 50 Tesla contracts in the middle of the day at 2 in the afternoon, hoping something happens. I mean, this is how traders blow up. 100%.
And losing that, and you said it early, we run out of gas. And I think maybe over time, as you build those muscles, that gas can last longer throughout the day, or it can. But early on, like you can get tired. Like you can get exhausted from doing this and you can just get worn
Yep.
out. And you need to be able to recognize that in yourself during the day and walk away and take a step back and go do something else. And we talk about this all the time. It's not new. I'm not saying anything new, but you can't just sit here and try to catch every move and you got to catch one.
No,
Be smart about how you
absolutely.
do this.
Yeah, that's why in the room I'm constantly talking about levels and cycles of the market intraday, and I'll say, okay, we're in a descending channel here. Next stop 342.25, and I'm saying that in part for the room, but also in part for myself because I'm saying, okay, all right, I'm on a stretch. I'm driving from Houston to Dallas. Okay, right now we're in location middle of nowhere. Okay, there's not a lot to do, so uh, y- the knowledge that that's where you are intraday will also help relax your mind, so you're not at attention level 10 and a half when you don't have to be, right? Because your mental resources are finite, and your judgment erodes throughout the day to the point where maybe by power hour, which when you really need your faculties, your decision making capabilities may be greatly eroded because you've been at full tilt all day long, watching every tick of the Qs or Tesla, perhaps unnecessarily.
And here's what you're not saying when you're going through this is when you say, "Hey, next stop 342." You're not
Yeah.
saying, "Okay, buy now, guys. It's going to 342." For those of you guys listening who hear him say that, "Oh, it's going to 340. Okay, I'm going to take it." You take it, and 15 minutes later you have a losing trade, and then 20 minutes later it hits the level Geronimo's talking about, and you're like, when he's saying that, he's not saying it to say, "Jump in the trade right now. We're going to this level." That's not what your goal is.
Correct, 100%. My goal is to basically extrapolate what the market is doing within a consolidation. Are you talking to me?
Sorry, I
Oh,
my wife had asked a question. She doesn't want to be on
oh.
camera, so I dropped her off camera.
No problem.
Yeah, you're good. Sorry, sorry to interrupt.
No, no, no,
So
no worries. So I'm just extrapolating price levels so as to zoom out and understand. Okay, so all right, the likelihood of us having a major reversal here in the middle of nowhere is probably pretty low because we haven't hit any kind of significant inflection point intraday in the market. Therefore, okay, next relevant stop is going to be this level. I'm not trying to be Nostradamus here. It's not. I'm not trying to showboat or showcase any prediction making capabilities. I'm saying until we reach this level, there's not a lot for me to do here.
mhm. You're just identifying. You're like, hey, it ain't here. I'll wait,
Right.
and then I'm looking at something else when it gets there. I'm now looking once it gets to that level, then I have something else to look at. Okay, now I'm at my destination. Are we going to go shorter? Is the tape super weak? Is there some negative market news? Or are we just kind of hitting this level and it looks like support? And hey, I think we're going to bounce up here and we're going to go to the next pivot level. We've got a 15-minute breakout. Like now I start looking for other strategies once we get there. It's not,
Right. Exactly.
you're basically warning people, hey, we're in the middle of nowhere. The moves happened. Yeah, if you're holding a runner and you got 10% left of a trade and you're letting it go, sure, you can let it play out, but
Hmm.
this is done until we get there.
Yeah, and it's so important because as a trader, if you don't decrease your mental intensity at times of the day when you don't have to be intense, there's no reason to do that. You're just going to wear yourself out. You're
I,
going to make bad decisions, and
I
it's going
do
to
it
be a
when I'm
bad time.
golfing. And when I've done other sports, it's like, and I'm talking about like the flexing, like I get tense. And like I was playing with some older guys the other day, and they were like, yeah, like I was like gripping and ripping earlier, like just like smacking the ball 280, whatever. And I was hitting pretty decent, and I was playing like bogey and par ball. And I was feeling really good. And then like halfway through, what it was is I get tired. I don't have the muscle memory yet of my swing to be consistent when I get tired and fatigued. So just like in trading, and you could use any sports analogy. I'm just using golf
Sure.
because why not? But once the like natural, as it were, skill or whatever it is kind of fades and you get a little bit tired, then you start reverting to muscle memory. And we used to do this in the Marine Corps when we were doing shooting and when we were doing different training techniques and
Yep.
exercises. It's like, hey,
Changing magazines.
yeah, it's just like, you're doing these, reloads. You need to be able to just do them in your sleep, because when you're getting
Yeah.
shot at, you're getting all this stuff happening. You're not going to be able to sit there and think. It's just muscle memory, just going through the motion of something. Same thing in sports or in trading. When you're
Uh-huh.
doing something, you actually need to have that kind of, just, it's almost like a muscle memory trade. You're just seeing the tape, the level two, identifying it, taking the trade, and you have to get there. But you cannot, like you're saying, just be flexing and just tense the whole time, because you're going to be start hooking the drive, or pulling it,
Yep.
or you're just going to be like smashing your magazine against against your gun. You're not going to be able to get it in, and you're going to be doing everything wrong. You actually just have to kind of be in that rhythm and relaxing through the play. If you're flexing at the wrong time, you're going to hurt yourself.
Absolutely. Yeah. Important.
So just reiterating, what you said. Are there questions that you guys have? And I don't know if Drunwith, there's something else that you wanna hit on. But I know we've been going for
No,
about an hour. I want to respect your time and
no,
everybody
it's
else's
it's
time.
fine. I'm happy to come on. I love your content, man. You stepped up and you're helping people. I wish more bandits would do the same. I think it's great.
I think
And yeah, if there's any questions, I'm happy to answer them.
we'll see if anything comes. If you guys want to throw anything out, if you have anything specific about what we said. But in short, just as a quick reiterate, and you can see this and answer it. But this question that was just posted, the Matt posted. But what Geronimo is doing, there's a reason behind it and a specific goal behind it in the news beat room. And when we're talking about levels and we're going kind of beyond just those quick hyper scalps, and there's a way to get there, and there's a way that you can get there. You shouldn't be frustrated or angry if you're not there yet, if it takes time, if you don't understand what he's doing or the levels, he's calling or stuff like that. It doesn't mean he's right or you're wrong. There's a million different ways to do something, but there's a lot that you can learn from being in here, from trading around, to learning to identify these levels. So maybe not now, but a year from now, this can start, or 6 months or 3 months from now, this can start becoming easier. You can start identifying these things. You can learn when to take things and when to stay away from things. So instead of necessarily maybe getting frustrated or just mad because you're having a hard time and the market's tough and other people are up early, or whatever it is, there are ways to adapt to where you can improve and actually help. You can get there too, I guess is what I'm saying, and kind of what we wanted
Yeah.
to talk about today.
No, absolutely. And it's there's so much to mastering one strategy, right? Like you brought up Tesla today, and we went over all the reasons why I wouldn't have taken that particular VWAP retest, and I'm sure you would have had your own reasons for doing it, right, for not taking it. There's so much involved in recognizing all the different variables that make a trade work, and you have to do that in real time while competing against some of the world's smartest people. That level of unconscious competence takes a long time to master, which is why I always tell novice traders, man, size down. You're going to pay your tuition to the market no matter what. You're not going to start trading and making gator money in 2 months, 3 months. It's just not going to happen. Are there people? Are there people who are able to pull that off? Maybe there are some. I mean, there's a lot of traders that I've seen actually go through the T3 room that have come up right, quickly within a year or so. But it's rare. There's just so much to it. So just tearing down, taking small size, so that you can keep that winning mindset as intact as possible is absolutely so important. To
So question here, and I agree. I agree entirely. Mindset is everything. Winning mindset is everything. Trust in yourself is everything. Believe me, like it is 100% everything. You have to have faith in what you're doing and trust it. And there's sometimes just like I like, yeah, sure. Some days I have red days. I've had a lot of red days this month, actually, more than I thought I would have. And I'm fine. I'm not. It's just been very flat. I haven't been wrecked. But mindset and just trusting your ability to trade is a big thing. And are you talking about this bar here, the third 5 minute bar, Matt? So Matt, he's asking if this is a Mark V. No. So for a Mark V, so the third bar breakout from this is not a Mark V. This is just a 5 minute breakout. And so I called this morning and I made money in it. It's not a Mark V. Your first Mark V in Tesla, I don't even think there technically is one, but there's no actual Mark V here. I don't think there's a Mark V until a Mark V short, like here. Yeah, I think all the way down here would be the first Mark V short. So you have to be above or below the first candle for it technically to be a C strategy. One of the rules are it has to be above or below the first of that bar. So 5 minute bar. It's nothing. It's just a 5 minute breakout, Matt. Like what I saw on Tesla this morning, and I'll review this tomorrow. But what I saw on Tesla this morning was basically you had a small breakout, and then it went down, but it didn't continue to flush. And it was like you had a no year limit or a Mark 1 short here that didn't work, and I took a loss here and it popped. I was like, huh, okay, I'm going to watch a 5 minute breakout. And it was just kind of, I'm not going to call it a hunch, but you had a break up, and I don't know if this is a thing, and then it broke down and it didn't continue and it followed through. So then we popped back up here, and I was just looking at it. I was like, well, let's see. Sorry, I'm just going to jump around to see where I'm at on all my charts. Is this my 2 minute, my 5 minute? Oh, sorry, my charts are messed up. All right, 5 minutes up top here. Hopefully y'all can see it. Yeah, you can see it. So I called it, but what I saw was just kind of like I figured it would kind of be in a pattern. And because it didn't follow lower, I thought it was going to break out a little bit. And it was just kind of like a 5 minute breakout. And I was just looking at it and I was like, hey, we got a 5 minute breakout here. It failed to go lower. It's probably going to pop up a little bit and retest the highs. And it's just kind of like a momentum play, something I could tell from watching tape and watching Tesla every single morning for 2 years. Sometimes you just kind of get a feeling for what's gonna happen. And I had a feeling right here on this bar when it pulled back down and it failed to continue lower. I was like, I'm going to watch this breakout high. And then I took this 1 minute here and I caught a lot of this 5 minute bar, actually, all the way up to the 200. I think I caught most of that move. And then when it got to the 200, I sold. And but there's no Gator 5 there. There's no Mark 5 there. It's just a 5 minute breakout that I thought was going to go because we didn't continue lower. When we hit VWAP, we didn't flush. So not to ramble, but it didn't flush off VWAP. Because it didn't flush, I went long. The tape slowed down. There was no volume when it hit VWAP. If there was volume, it would have hit VWAP and it would have flushed down. There was no flush. The tape went slow. It dropped a little bit. It was really, really slow here, and I was like, I'm playing this long. I think it's gonna reverse, and it's just a momentum guess, I guess. I don't know what to call it other than I've seen this movie before. JR, you got a question from TC, DT and TC. Tweezer versus Shooting Star. Can you show an example of each? I don't know if you have one ready. It's kind of hard to pull one up, but
Sure. So Q. I mean,
I'm on.
Yeah.
You.
So go to So here on the 15 minute, on the 2 minute. So here you have a Shooting Star reversal at 3:30 on the 2 minute chart. This is basically. Why is this significant? Because you had longs who were betting that the pullback into the 21 was going to bounce and they were going to get a high of day, right? And what happened? It didn't even close near the highs of these preceding bars. It reversed back to the opening price. So the next candle, the bulls gave up, right? And brought it lower. So this is a typical Shooting Star reversal here. 15 minute, this is your tweezer top. Tweezer tops, you have to look at them within the context of other levels. I look at them carefully. Tweezer tops and turnaround bars within a context. The context here was that this was the previous day's close, which was an important close in the market. So this gave me a lot of high conviction on the 15-minute that we were getting ready to roll over.
And another question: as a new trader, how do you recover from a string of losses in terms of psychology? What can you implement mechanically to keep your emotions in check, i.e., 2 or 3 trading days? So, 2 or 3 trading days out of the week, you're red. What do you do?
What I was always taught that has worked for me really well is first of all, it is incredibly important to assign. Okay, let me back up. If you're not if you're not doing the accounting work and the audit of your winning and losing days, and you're developing as a trader, you are letting enormous potential go to waste, right? If at the end of each day, you are not going through your trades one by one and understanding what you did right and what you did wrong, you're doing it all wrong. Because what creates unconscious competence in trading long term is not just getting good at trading. Well, you might say, yeah, getting good at trading. Well, how do you get there? Part of how you get there, and this is why this is twofold important. One is understanding what mechanically you're doing right and wrong, but also assigning meaning to your losses, right? If you take a bunch of losses intraday and you don't assign a meaning to that loss, your subconscious will assign a meaning for you. Trust me. It'll say, you took all these losses because you suck, because you're stupid, because you're destined to fail as a trader, and because you're delusional. There's no way you're going to be able to succeed at doing this. If, on the other hand, you do your due diligence at the end of the day and you say, oh, you know what? On this Mark V, I was actually below the first 2-minute high, or it wasn't a chart reset, or I took a Mark 1 right under VWAP. What was I thinking? Then you start to assign reasons as to why the trade didn't work. And all of a sudden, your subconscious goes, okay, all right, well, I don't totally suck as a trader and I'm not destined to fail. I need to make these adjustments. So those are two really important reasons as to why step one is absolutely spending the time to allocate auditing of your trades. There's amazing software out there if you want to use TraderSync or TraderView. An Excel sheet will work too. You don't need to get fancy, but actually showing your trading account and your time during the day the respect it deserves by going through your trades is massively important. The second thing is to tier down. To tier down to a size where you're psychologically comfortable enough where losses aren't devastating to you, right? Because if you're still learning lessons in the market, why are you paying $1,500 a lesson?
Mm-hmm.
Why are you paying $3,500 a lesson when you could be paying $500 a lesson, or two, or one? I mean, there's no right answer here, but what I'm saying is tiering down during periods of development is incredibly constructive because it takes away that toxicity and it helps you focus on the pure mechanics of trading. If you can't make $1 or $2 or $5 trading the Qs with a share, what makes you think you're going to be able to make a net profit of $3 trading 10 or 20 contracts at a time? There's just no chance, right? Now, on the other token, once you've got yourself sorted out and you're winning on a consistent basis, it is really important that you tier up to a reasonable level that's sustainable in terms of your career as a trader. A lot of people get really comfortable, being the perennial, 50 share per trade type of trader, and then they wonder why they're holding a trade for $5. Well, dude, it's because you're not taking any size, and for you to make any money, so it goes both ways. But those, I think, are the two most important steps. And then you rack up those little wins, you build up your confidence again, and you go into a new cycle. And this will go on for the rest of your life in your trading career. It never ends.
I think that's important for people to know. I don't think it ever stops.
Nope.
Like I'm pretty sure it doesn't, and I haven't been doing this long enough to be like, yeah, it never does. But I'm pretty sure you're gonna go through these cycles of bad months and hard days and weeks, and it's not just like this forever. Like, oh, if I could just get past this level, if I could just like, no, it's a constant growth and constant change, and there's no just instant like, hey, I got it figured out. Okay, I'm good for the rest of my life now. I don't have to do any more growing and developing
Yep.
as a trader. Not
Yeah. Why do you think the trade rooms have psychologists and risk managers on staff full time? It never ends.
It doesn't, and it's not going to, and you shouldn't expect it to. If you're coming into
Nope.
this job being like, this is going to be easy, there are times when it is, but mentally, I don't know. I don't know. Every job's hard in their own way, and everything is different in its own way. And this can be very easy, but if you're coming into trading as a new trader with the wrong mindset, and you almost need to accept that part, and I'm going to talk about this tomorrow or Friday, I think, that losing is just part of it, and your ego can't be tied up in it, and your everything can't be tied up in it. It's just part of it. You just lose, and you just have bad days. And what Geronimo said is so valuable, that you need to understand why sometimes you lost, especially if you're having a hard day. So if you're looking at something and you're like, oh, well, I tried to take this breakout and this 2 minute chart here in Tesla early and it didn't work. Why didn't it work? There's probably a
Yep.
bunch of reasons why it didn't. Who cares that it worked over here? You're below all these moving averages. You're the 8's below the 21, the 200's above you. There's some other indicators that are there. Like, yeah, sure. If you just held it all day, it went back up at some point. But are you really going to be able to do that?
Yep.
No. Like, this wasn't a good trade if you were looking for day highs here.
Yep. Absolutely. A lot of people call it the lion and the lamb, right? There's a lion, there's a champion inside each of you guys, dying to break out, and then there's a lamb, like a victim, right? A person looking for any excuse to justify why you lost. And it's up to you every day to assign meaning to your day, and to set the correct mindset to that day, and to assign meaning to your losing trades so that you can feed one of those two. And if you don't, they will feed themselves.
Mm-hmm.
I guarantee it. And it'll usually be the lamb, not the lion.
Yep. And just what I would tell new traders and what I still tell myself is the same. There's no like secret to this. I don't keep anything for behind the curtain. Like, um, micro wins, micro goals, proving to yourself that you can do it, which partially what JR is saying here is part of that. But you just have to regain your confidence. And sometimes it's taking one or two trades and being green and walking away from the market and just being green and just being like, hey, I'm good. I traded well today. Like, I did this really good. And you just have to have that confidence in yourself. And if you go through 2 or 3 trading red days, first you have to figure out why you lost, which is recording your trades, journaling, recording your screen so you see what you did right or wrong. I'm like, hey, I just did this or this. I'm going to change something. I'm good. I got this. I lock in a green day early. I walk in 2 or 3 green days, and I kind of just build myself back into it. And there are different ways to do that, but like if as a new trader, that's what I would tell them to do. It's like, hey, just get a green day under your belt. You'll forget about these red days really fast. Get a green day or two under your belt, and you're going to feel like you're the king. Um, is there such a thing? And let me know if you have to go, Jr. Rich asks, is there such a thing as a triple top on the Q's 2 minute chart at 312, 314, 316? So this is that Q's at the end of the day. 2 minute chart. Pull this up. What am I looking at? You had this.
I guess so. Yeah, it's a little tripled up, I
Yeah.
suppose.
Met the trader who used this on the daily chart for short swing trades with great success. I mean, if they do it, I don't swing trade. I don't do Geronimo. Like, cool. I don't know what to say. I'm not trying to be mean or anything. I guess it's a thing. I mean, if somebody uses it and it's a thing, it's not something I use. Uh, yeah, the 1-1-3-5 rule JR suggested for sizing up. Yeah. If you can't make money with a dollar, trying to trade 100 contracts at something isn't going to make you make more money. That's just how it is. That I
Yeah.
definitely don't stay there all day though, guys. Like once you get good and you get comfortable, move up. Sorry, just reading through
Super
some of these.
dangerous. Super dangerous to stay comfortable in that. It'll create a real dangerous like false sense of confidence because you're exercising your mechanical muscles but not your psychology, and you're going to create a big disparity there. Your psychology and your technical analysis and your overall adroitness as a trader need to develop in conjunction. They're parts of a rope
Hmm.
that are strung together, and if you're going to have a strong rope, all those things need to work in conjunction. So
I think of my money as like soldiers in a battle, and because yeah, I can use them an unlimited amount of times, but I'll start making poor decisions as I start doing the wrong things and stuff. And you make poor decisions as a leader, as a general in battle. You lose men, you lose dollars. Um, little bit different, obviously, in trading. But if you know World War One history and some of the stuff that happened in the upper leadership, and how like they completely like they weren't able to get through the all the trench warfare, the lines and people that were dying, and the generals blamed the troops that were getting slaughtered on the front lines, just saying, well, we need more troops, these aren't good enough, as they continued to just send them into the into machine gun fire. And basically, in a sense, less important, but that's what you're doing when you're just sitting throwing money at a problem. You're just like, well, I what I'm doing is good. I'm not the problem. I'm going to throw more money at this until it works. And then you're just getting mowed down. You're just like throwing it right into the buzzsaw of the market, and it's just going to take everything. And eventually, you're going to be done.
yep, self-correcting problem.
Yeah, you can't do that for, for too long. Thankfully, lives aren't at risk, hopefully, if you're doing this, but like it was back then. Leadership is key, and leadership over yourself is key. Last one. I heard Jared talk about Wycliffe theory. Do you use that a lot for your long hold, like your range plays?
I don't want to get esoteric. Uh, you can spend an hour and get 99% of what you're going to need from Wyckoff theory, or you could spend the rest of your life and get the other 1%. Okay. So I don't want to send people down a crazy rabbit hole. All I'm saying is the market typically has four phases that repeat in all time frames, right? You have your accumulation and distribution at the ends, and then your markups and markdowns. It doesn't necessarily, if you're trading intraday, need to get much more complicated than that. Spending a good couple of hours understanding the concepts, I think, will help you identify ranges. But if you just do this in the morning, you look at the daily chart and you say, okay, we're breaking down from this level. Like this morning in Tesla, I said, okay, Tesla looks like we're going to retest 820 and 810. I have a bearish bias on the day, and I set some basic ranges. And then once the day started, identified key levels, and from there, you're working now with a much clearer understanding of what the road ahead might look like, right? So, am I advocating that you guys study Wyckoff theory? No. What I'm saying is that just a basic incorporation of some of that vocabulary into your chart reading skills may be helpful so that you understand, okay, are we in a range? Are we in an uptrend? Are we in a downtrend? Are we at a top where distribution may lead to a downtrend? Like those basic concepts will save you a ton of money and aggravation in the long run, right? Um, so like sometimes in the room, you guys will hear Kelly go, okay, we're three legs down into a support area. He's saying, okay, we're into an accumulation zone, right? Or I will call that a demand zone. Doesn't matter. It's the same kind of concept, right? You're out of sellers, buddy. Okay, so buying puts here may not be the brightest plan. If you look at Tesla between 12 and 230, right, you're in a clear accumulation zone, right? Right at 810, which is what we had talked about in the pre-market. So having just having incorporating that sort of thing into your vocabulary and looking at multiple time frames, especially the daily, will help you zoom out and not get stuck, you know, trying to short this low and
Hmm.
this low. You know what I'm saying? Like, uh, so just incorporating that kind of vocabulary, I think, is helpful. But I don't think that going off into a monastery in Tibet and dusting off the Wyckoff
Yeah, and just
is necessarily going to make you a better trader. You know, exactly.
it's not. It's really not. And not that I
Nope.
know much about all that kind of stuff, but
Common sense, dude. That's all you need to be a good day trader. Common sense. Just zoom out a little bit.
yeah,
You're good
knowing
to
a
go.
little bit will get you there.
Uh
And
huh. 100%.
you'll learn what you need to know if you're humble and you stay in this business for a while. I feel like you're going to start picking up the stuff. You're going to learn. You're going to be trading around people. It's like I was calling out Tesla in the room today, talking through different things and how I was trading it. And I called breakups and breakdowns. I'm like, hey guys, I'm done with the name. I'm going to go run some errands. Name's done. I would watch this level and this level. Bye. And and I called out several plays for you guys, and I think it might have helped a few. But like, I'm not. I've never studied any of that. But I now know it's like, hey, 3 legs down, and I know how to look at a chart and be like, oh, we're 3 legs down. I know how to look at a daily and be like, hey, we're out support right now, and look at stuff. It's like, So that's where in the middle of the day, when people are giving back their days at this level Geronimo's talking about in here, I'm not giving back my day because I'm just going to leave it alone. Hey, if it wants to break down and flush and there's some negative news and Musk is arrested for smoking pot and is going to jail or something, then maybe I'm going to short the name. But short of that, it's like, okay, I'm going to leave it alone. I'm going to wait for it to
Yep.
pop back up to VWAP or the 200, and I'll look to try something out there, maybe a 15-minute or an hour breakout to the long side. If it holds the support level for a while, I'll scalp a point there, and that's it. And just
Yep.
being able to identify that is key, as opposed to catching every 1 minute breakdown. You're just going to get wrecked when you hit that support level if you don't have that bigger picture.
Yep. Let it go without me were the five magical words Melnick will always utter, and he would say that for a reason.
Mm-hmm. Brilliant. Let's see, and I think this is where. So his not everything JR does right now is on T3. If you're interested in the T3 live room, you can drop me a comment in here, come in Discord, and hit up somebody, and we can put you in contact with a trading counselor who can. I assume JR can get you into the T3 live room, but all of JR's content is in there. It's behind a paywall, unless he does stuff with me. Is that where that's where you're keeping all your stuff right now? I assume.
Yep. T3live.com. And if you have any questions, go ahead and ask Gator, and we'll be happy to help you guys out.
Yep. There you go. And it just depends, James. I could tell you there. It kind of just depends.
100%.
There's not like I couldn't answer that question right now. So thanks, guys. Hour and 35 minutes in. I really appreciate you guys hanging out. If you did hang out, I see 50 people watching, only 25 likes. Yo, 50%. That's pretty cool. But yo, throw a like down, comment, subscribe. If it's something you want to do. If you don't have to, but it means so much to me that you guys came, that you hung out, that you spent your time here with us. And if you're rewatching this, same thing, to listen to me and JR, or less me. JR's got a lot to offer, sitting here. I really appreciate it. It means a lot. Thank you so much, JR, for coming on. Loved having you.
My
Welcome
pleasure.
back here another time. I'm sure we can do it again eventually. But yeah.
Anytime, buddy.
All right, guys. Y'all have a good night. Get some rest. Get some sleep. Coming to the market clean tomorrow. Before we got on, I said something to JR. It's like I am not coming into tomorrow with an expectation it's going to be as good as today. Like I have no idea what tomorrow holds. It's a blank slate tomorrow. Whether you had a good day or a bad day, it doesn't matter. Come into tomorrow clean, and let's trade intelligent, guys. So I'll see you in Discord tomorrow if you're interested in that. Let me know. I'll see you all. I'll see you all later.